Yeah, I mean, like if I'm being cheeky and an old TRADFI guy, stable coins in the past maybe was a parallel shadow riskier type of dollar. And, there's still that reputation in some places. That's why, stables like Ripple are well regulated, where we're spending our time. There's a lot of work to be done there, and change, I think, happens gradually and then suddenly, and it's definitely coming. I have absolutely no doubt about it, but there's still quite a lot of work to do. We've got maybe stablecoins today are accounting for 1% of cross-border transactions, something like that. The other 99% is trapped in batch files and banking apps, and that will be released once we integrate to the systems and and really demonstrate that trust that will come with regulation.
So that gentleman right there was speaking at a Ripple Swell conference, and he just went on to reiterate that once regulation is firmly into place, everything's going to kick into gear and the institutions are going to get on board. He has a firm belief in that. So that's going to take us back to a video breakdown that we streamed just a second ago. Max Gochman playing some video clips from his segment piece in his interview. So in today's video, we're going to break down some important bullish signals that were recently shared by that gentleman, Max Gochman from Franklin Templeton, in an interview that took place like the last week of December. And then we'll roll over into some technical analysis updates on Canton and XRP. Then we're going to dive deeper down the rabbit hole into some fundamental developments behind the Canton network that have recently taken place since we are now at the end of January, and take a look at just what they could mean for the future of institutional adoption. Now, before we get started in today's two-part video breakdown, my goal is to just help you guys understand the bigger picture, connect the dots, and see where real opportunity may be forming so you can stay informed, prepared, and ahead of the curve. None of this is financial advice. And I want to say right off the bat that if you guys don't like certain digital assets in the crypto ecosystem, maybe because you haven't fully done your research on them, or maybe just because they don't sit right with you, don't invest in them. It's that simple. If you don't like XRP, don't invest in it. If you don't like Canton, don't invest in it. If you don't like HBAR, XLM, or XDC, or the tokenomics, or the team behind it, or whatever, don't invest in it. Nobody's forcing anybody in this community in the crypto space to invest in any digital assets, nor are we here at CYPRX. And so we cover research across a multitude of different digital assets. With that being said, we are not biased towards any one particular digital asset. I hold a multitude of different digital assets across my portfolio, and we're actually going to dive into that in something that Franklin Templeton's Max Gochman said in his speech today, in his interview, where he goes on to talk about rebalancing your portfolio and not to get so attached to certain rails, having the ability to shift your bias if the environment calls for it. So with that being said, let's jump into today's video breakdown. We have some really great stuff for you guys today. As always, welcome back. We do appreciate the love and the support. If you guys are watching this on X, do us that favor and share this live stream so we can have more people jump on board. I'm waiting to see if Aqua is going to jump on with me today. He is having some family over, I believe, today. So I'm not too entirely sure if he's going to join us. If he does, he might pop up in the waiting room and I'll let him in. Outside of that, let's dive in. So let's just go back before we jump into the technical analysis on XRP and Canton coin, taking a look at some levels and things that we were talking about in previous updates, picking up where we left off last. I want to take you guys back to this gentleman here, Max Gochman. His credentials at Franklin Templeton escape me. I believe he might be the digital asset lead or something like that of research at Franklin Templeton. Double check my work there. I just don't remember his credentials off the top. Actually, as a matter of fact, let's see if it's in the description right here. Matt Gochman, since the intersection of Wall Street, Franklin Templeton is executing. Let's see. Okay, he's the Deputy Chief Investment Officer at Franklin Templeton, and he said some very interesting things at the end of 2025 in the last week, heading into 2026, that I think a lot of us should be paying very close attention to. The first thing that I want to play for you guys is that 12 minutes and 50 seconds where he goes on to talk about how Ripple, i.e. he's meaning XRP, could become a large cap digital asset. Now, what he meant by that, again, I have no clue. I'm just playing interesting key vocabulary and highlights for you guys. Take that for what it is, coming from a large institutional player like Franklin Templeton. Take a second here and listen.
Can you dive more into that for me?
Absolutely. And look, I think we can actually have an analogy in the stock market. So there's pink sheets, right? The OTC stocks, the ones that don't really trade, that well, that are, priced really low, that can get delisted, et cetera. I mean, that's the altcoin world, right? That's the meme coin world. And then you got your blue chips, which would be like your Bitcoin, Ethereum, your mid caps like Solana and Ripple that might become large caps at some point. And so what I think retail investors, at least savvy retail investors, started seeing, and actually, ironically, now institutions are starting to see, is that cryptocurrencies, and really we should call them digital assets because a lot of them aren't currencies in any way, shape, or form. It's not a monolith. Digital assets are inherently an asset class that has internal diversification. And that's something we're looking at in terms of how we model those different assets and how we construct portfolios with them. And it's something that we're educating our clients on. But interestingly, a lot of the savviest retail investors that especially that have been in the space for a decade or more, they really get it now.
Yeah, and you are there.
Right. So that was really cool. What's going on, Aqua? I'll jump Aqua up into the stage right here in just a second. But the gentleman here from Franklin Templeton, in a nutshell, just said that Ripple, Solana, and other altcoins could become large caps, i.e. blue chip digital assets in the future, which again is just, key vocabulary to pay attention to coming from an asset manager like Franklin Templeton, who also has investment and partnership in Canton network, right? So just be mindful of that. I find that to be very interesting considering that we're talking about diversification. We are well diversified here in the CYPRX community. We're not opinionated or biased towards one rail or one digital asset or one blockchain. And we just keep a very open mind. Aqua, what's going on, brother?
What is good, bro? How you living?
I'm good, man. Good to have you, bro.
Yeah.
Right now, yeah, man. Just to catch you up to speed, I streamed 2 panel discussions today, and this one had some of the most juiciest stuff. This gentleman is his credentials escape my mind again. He's a representative from Franklin Templeton named Max Gochman, and he said some pretty bullish stuff that I want to just reiterate to our followers. So just feel free to jump in commentary if you have anything to say after I play some video clips that he
Let's hear it. Let's run it for sure.
All right, cool. So the second video clip that I want to play is where they go on to talk about how you want to move with the institutional order flow and not after it or against it, right? So let's jump to 22 minutes and 50 seconds because, again, take in consideration where I'm pretty sure he goes on to talk about how once regulations are clear, these institutions, or excuse me, the gentleman before that I just streamed from Ripple Swell said, once institutions are clear, the floodgates are going to open and these institutions are going to onboard into the digital asset ecosystem. You don't want to be an industry participant after the institutions. Not financial advice. Again, do your own personal research, but you want to position yourself before the floodgates open, not after. Take a second here and listen.
Of Bitcoin trades, for example, are at over 100K USD. So these aren't small retail traders. I think there's a lot of compelling reasons for digital assets in 2026. And yes, regulatory clarity is a key theme. We are seeing more institutions come in. At this point, over 90% of Bitcoin trades, for example, are at over 100K USD. So these aren't small retail traders moving the markets. And I think that is a really important point. So as more institutions come in, you want to be on their side. It's a trade that's worked well in most asset classes. And from just, my experience, having a lot more institutions come to me and say, hey, how do we look at adding digital assets to our portfolios? How do we offer digital assets to our clients? And so I think that trend is going to continue. And it's going to be a global trend, not just the US trend as well.
He said global trend, not just the US. I think that's massive right there.
He said it's going to be a global trend. That's number one. And he also said that right now they have more institutions coming to them talking about allocating to the digital asset ecosystem, So I try to play these video clips because, this particular video breakdown alone has less than 100 views. And look at the sentiment right now. You know, the sentiment is completely distraught. People think that crypto's dead again all of a sudden because we're seeing a pullback due to risk off sentiment. And that's not what the institutions are saying. That's not what the people that are actually allocating hundreds of thousands of dollars to this space, as you heard the gentleman say, that these Bitcoin trades aren't retail traders. They're not thinking that way. So how do we position ourselves as retail traders with the money? Now, right now, that money is risk off. It's temporarily not heavily invested into digital assets. But once the regulatory landscape has changed, and once the risk off backdrop has eased slightly from risk off to risk on, I have a firm belief that once we see these institutions flood in at scale, we're never going to see the opportunity below $3 trillion to get into this market again. Once we go 6, 7, 10 trillion dollars, what do you think, Aqua? You think we're coming back down to 2.8 to 2.7 trillion?
Hell no. It's a whole different ball game by that time. And institutions will be here by that time. And I don't think we're going to see it leave at all. And we've been saying that for over, what, 2 years now. You might have been saying it even longer. But, like, yeah, these prices, man, the window is closing. It's closing.
It's
I'll just say
opportunity
that.
of a lifetime. It truly is.
It is. Yeah.
Last 2 video clips I want to play for this dude so that way we can get off this gentleman. He just kind of goes on to reiterate the importance of rebalancing your portfolio and then not getting locked into specific rails and so fixated on one thing, and having the ability to adjust under certain market conditions, which is something that in the CYPRX private community we have mastered and are still attempting to develop accurate and successful strategies in. I'm not going to sit here and say we're perfect, but across the board, we manage the volatility in the crypto asset ecosystem relatively well compared to other communities or compared to other investors. And that is because we're not biased towards one blockchain or one crypto asset. And we also have the ability to buy and sell strategically in the market via our institutional software at accurate levels, some of the most, if not the most accurate levels that are available to retail traders in the game right now, due to the institutional software that my team and us here at CYPRX Research have built over the past 4.5 years. It's not just some lucky coincidence. It's strategic implementation, paying attention to the right data, accumulating the right data, working with the right, coders and people that actually know how to code these things. And it shows in our community every single week, week after week after week. And we'll highlight some of those happenings right now. But I want you guys to actually listen to somebody with valid credentials say that rebalancing a portfolio in crypto is actually really important for long-term success. So take a second here and listen to what this guy from Franklin Templeton says.
Because of the volatility of the asset class, it's really important to rebalance your portfolio more often. And that should help you both tamp down your volatility over time and also should help you with returns over time. But if you're an investor who rebalances your portfolio once a year, if you're going to include digital assets, quarterly should be your bare minimum. And I would, in many cases with higher digital asset allocations, recommend a monthly rebalance as well.
Yeah, and like you said,
Go ahead, Aqua. Looks like your eyebrows raised.
Yeah, he just said a monthly rebalance.
Yeah, man. And I mean, this goes hand in hand. Now, I wouldn't recommend rebalancing your entire portfolio. I actually, personally, I'm not a financial advisor, so I wouldn't recommend you do anything. But what I personally do and will strategically continue to do moving forward is a portion of my portfolio I have allocated to swing trading, right? Where, because we have institutional software that highlights both buy and sell dark pools, at those buy and sell dark pools, I will shave off certain portions of my portfolio. For example, if I have 100,000 tokens of XRP and we go to an institutional sell dark pool at $3.82, I might sell 5,000 or 10,000 units of XRP to reallocate that capital in a pullback, still holding on to my long-term position, but shaving off some capital at the top at an institutional dark pool to reallocate and rebalance those profits into other assets that might haven't moved yet, or other projects that I firmly believe in are going to perform well, so on and so forth. And this just goes to show hand in hand that the strategies that we focus on in CYPRX where we're non-biased, we're non-opinionated, and we're able to adjust to certain market conditions and research other projects that other people otherwise wouldn't really give any attention to because they're so biased and opinionated on one specific project. This just goes hand in hand, and this is directly from an institution, not some average retail Joe. Cool. So next one that I'm going to play is, again, just kind of reiterating, not to lock into one specific chain, one specific rail, one specific talent, one specific anything, and just be open-minded in this space as time evolves. And this gentleman from Franklin Templeton reiterates that and stamps on that. Take a second and listen.
It would be to not be afraid to pivot, to not.
Analogy to help people understand, though. I really like that. All right. One last question for you, Max. If you could give one piece of advice to your younger self as an investor, what would it be?
It would be to not be afraid to pivot, to not be locked in. You know, when I started my very first hedge fund, I really thought like, hey, I'm a quant macro person and that's all I'm going to do. I learned later that actually I have to inject some fundamental research into what I do. This was right around when we ventured past the zero interest rate policy with Mario Draghi post the financial crisis. And then I learned that I had to actually learn how to build tools with artificial intelligence and try that out. And what I've learned is every time I've pivoted, even if my pivot didn't result in exceptional performance, it brought me a lot of useful lessons that later did result in great performance and really a boost for my career. So I would say the number one thing I tell myself and I tell any other investors watching is don't be afraid to try something new. Don't get locked in on rails.
Bro, we were just talking about this yesterday on our Zoom call as a community. We had 50 plus people on that call. And the topic was being able to pivot, you know, doing research outside of, you know, your favorite crypto asset and accepting what is real, right? How many comments do you get on the Canton post of people fading Canton? I don't know how many Metallicus posts of people fading Metallicus because, you know, I was always hooraying for XRP, but it's like, I've been able to pivot and understand that there's going to be more than one winner. And in my opinion, there are some projects that are, I want to say, light years ahead of others. So.
Yeah, man. I mean, I think, and I've always been a firm advocate of diversification being a key to a portfolio, successful portfolio in crypto. I mean, over the past, I've been in crypto since 2016, Bitcoin and XRP were my first two investments. I've held XRP in my portfolio since pretty much my first investment in XRP was sub 11 cents. And then shortly after that, sub 27 cents. So most of the XRP I hold is, you know, still all, if not all, in profits outside of a couple $1,000 that I've dollar cost averaged in over the years. I'm a firm believer in XRP's price, just like everybody else, but I'm not afraid to hold other digital assets in my portfolio that have good fundamentals that otherwise might perform better in certain market cycles against certain narratives and so on and so forth. And I just think that marrying biases, especially if the bias that you once housed back 6, 5, whatever years ago isn't the bias for this next cycle, you know, we as retail traders are not about to drive this next market cycle. So we should position ourselves where the smart money is going to position, regardless of what our personal opinions are. And that's how I'm going to allocate into crypto this next cycle. It's going to be trailing where the institutions are going to allocate into, regardless of my personal opinions. So yeah, that's it for those couple of video clips. I just found that to be very knowledgeable and informational. You know, he went on to mention that XRP, including different other altcoins, could possibly become large cap blue chips in the future, which is super bullish. I love to hear that because I hold a fat bag of XRP. He talked about rebalancing your portfolio, moving with institutions and not against them, especially once regulatory clarity hits, and then talked about not fading diversification and having the ability to adjust biases and not marry opinions, right? So great stuff from a traditional financial investor at Franklin Templeton.